back to the Hawaiian Trader. Let's take a minute to address one thing that everyone's going to have to deal with, and that is we need to talk about duration. Now, this is weird because I remember when I first started trading, for me, I felt like this was something that was not relevant at all. People were saying, oh, what's a trade duration, or how long is it going to last? Now, let me give you a little bit of history and background, so don't check out completely here because this is important because it's going to explain how the industry views it, and then more importantly, it's going to help you figure out, so where do you fit in with that? So let's talk about this first of all. Number one, if people say a trade or an investment is short term, meaning it's not going to last very long, let's say 1 week or 30 days or something like that, the immediate reaction of the market is that that is risky. And the reason why is because you're not leaving enough room in there for error. So it's not, for example, here's a really good example. If I buy stock, I can literally hold stock for 50 years or until I'm dead. And where's the risk? Well, until you actually close the position, there's actually not any risk until it's realized. Now, think about some of those terms. I know for some of you, you're really new at this, but this is literally the mentality that stock traders have. It's you could lose 50%, as an example, of your stock value. But unless you close the trade, you really haven't lost that much money yet. So what I want to do in this lesson is I want to dive into that concept of how long should a trade last? And I think we first have to address, well, what kind of trades do I want to be doing in the first place? For example, I get a lot of people that come to me and they say, I want to be a day trader. Day traders make a lot of money. That's what I want to do. Okay, well, that's a very specific kind of trader. The time frame is extremely short, so I hope you have no job or no life or nothing else outside of day trading, because while you are trading, you will be locked into your seat and you're not going anywhere. So I hope you have a lot of time to do that. And those are very, very short-term trades, which is one of the reasons why day trading in general is considered in the industry, it's not my opinion, to be risky. And that's because you could lose everything that you're investing in one single day, or even more accurately, I should say, within 5 or 10 minutes. You could lose crazy amounts of money. Now, that also means you could make crazy amounts of money. So because of how fast the investment can be working, and because of the time frame being short term, it's considered risky. Now look at that as a comparison to the complete opposite, which I just talked about, which is stock. If I buy stock, I could literally lose almost everything I have in that position, but unless I actually close it, it's not really a loss, so literally I could hold it for 30 years plus and beyond that. And you might think that's crazy. Who would ever do that? This happens all the time. This is just the way the market sees it. If there's more than enough time for it to have the opportunity to grow or decrease, but there's a lot of leniency in there, it's considered to be more conservative. Now, think about like what I like, which is option trading. Option trading, a lot of my trades can last 30 days or less. That means it's risky by the market standard. Now, I don't see risk that way. The way I view risk is how much money do you put into a trade? If I put $100 in a trade and I could lose $100, that's the risk in the trade. It's not how long the trade lasts, but that's just a mentality and shift that you're going to have to make. And if you guys haven't been to my podcast and you haven't watched, there's a whole podcast that I go into the mentality of risk in my mental download podcast. Definitely go watch that because there's something up here that we've got to figure out before you can understand risk on a personal level. But let's just talk about that. So now that you kind of understand the risk of the market, long-term in duration is less risky. Short-term is risky. Now that's just industry standard. You decide where your opinion lies, but that's what they're going to see it as. That's why if you talk to somebody who's a stock trader and you say, yeah, I'm thinking about doing these options, something like, they're going to go, you're crazy, you're nuts, are you serious? Do you want to just wreck your life? That's really irresponsible. It's because they're thinking that kind of trade has been labeled. That kind of approach is labeled as extremely risky because you could lose everything you have in 30 days. Just like a day trader could lose everything they're trading in minutes. Just like a stock trader could lose everything they have, but it might take 30 years to get there. So you see, there's always risk. There's always things that can happen that can go bad, and they can always go bad on you. It's just a matter of when.